if you look in your panel, we have 4 more speakers. The first speaker, real excited to hear from, John Edge, who is the co-founder of Disk, which is a UK company focused on financial identification, fellow MIT Connection Science, and from Massachusetts Institute of Technology, MIT. John, please join me on the stage. Let's give a round of applause for John.
Thank you. Firstly, thanks for having me here. It's great to be in a room full of people with such experience. Quick scene set. I'm the token Brit in the room. You can get on a bicycle and cycle from the Bank of England to the executive branch of the government at Whitehall in about 10 minutes down the river. You can then get on the tube, the Jubilee line, down to the regulator in about 10 minutes. And then you can get the overland train back into Bank from Canary Wharf in about 8 minutes. So you can cover off the central bank, the regulator, and the executive branch in an afternoon. And I think this is one of the huge advantages of a small country versus what I've experienced in the US. Now, I put that in the context of we've deployed and have working today in Manchester a social welfare distribution platform that enables people who are financially underserved or don't have access to financial services to get instantaneous credit of their due social welfare balance. So it's Friday afternoon at 4 o'clock and a family has a requirement for funding for the weekend. They want to buy food. Now, this platform can allow the government to instantly credit an account with available funds. The problem on that Friday afternoon for the existing system is it can take 3 days to clear, which means that about 6 o'clock, when the kids aren't going to eat, I'm going to a payday lender. 77% of all payday loans in the UK are used to buy food. It's because, on having done market surveys, that people all of a sudden get in the requirement to get funds but can't get funds because the existing infrastructure for the distribution of pounds is a 3 to 5 day process. So I'm going through the problem statement first because the people with the problem don't give a rat's ass about what the technology does. They just want the problem solved. So the citizen problem, given that we're in the public sector and our role is to serve the citizen problem is, I need money, I need to buy food, I've got to wait 3 days, or I've got to go to a post office. Now, the government problem is we have £179 billion that we send to 20 million people every year, and in fraud, error and waste, we lose about £5 billion. Anybody want to guess the number for what the US federal government loses a year in the distribution of social welfare? Somebody guess. No, it's not quite that big. So 137 billion. So you guys have a $137 billion problem in moving money down the supply chain of money. Now let's add on another. Is anybody from the IRS here? I'll give you that one. SIRF, Stolen Identity Refund Fraud, $32 billion. You can start adding up the supply chain of money issues in the US and you're over $200 billion pretty quickly at a federal level. So you look at the government problem, and so in 2014 I had the good fortune to have a good education and work in financial technology. This technology arrived and I had the good fortune to be in a position to meet somebody in Mr. Cameron's office and have a conversation and say, would you like to help 5 million people get more appropriate financial services? And would you like to save £5 billion a year? What's the risk? Well, we've got no idea if it'll work. So what we then got was a pass from the Prime Minister's office to go to the regulator, and this was the start of the FCA sandbox, that we now have this platform to talk with the regulator. And what we hypothesized was, if somebody's got a phone and they can have a digital wallet with a Bitcoin in it, why can't they have a digital wallet with a pound in it? And that's what we built. Now this system is regulated, live. It's regulated as a non-bank payment service provider, and operational, and it took about 18 months to get the regulation done, bearing in mind there's the bicycle, the subway and the train to do a lot of those loops. But the end result is, it is the world's, as far as I understand, and this isn't we're wonderful, it's just, I'd say Brexit helped a lot, because Brexit scares the pants off everybody in terms of competition. So if you want to get something done, London's really good right now, because they'll do anything to try and create new business. It's the world's first deployment of government funds moving directly to citizen, leveraging distributed ledger technology. It works. You know, the main message for me today is it actually works. Now, there are some problems, but it does work. We also had a mandate that the citizen has to have choice. So there's a companion card, it's a prepaid card, it's a Visa MasterCard. Because if you go in and try and use it and the merchant doesn't accept it, you need choice, and you also need to be able to get cash out. So there's 3 forms. So the citizen can choose the instantaneous network, Visa MasterCard, or cash. What we found absolutely fascinating was that the citizens liked using the network because they had absolute certainty of how much money they had and when they had it. And they knew they had £11.42. That's all. The low-income budgeting is incredible. What they can't survive is shock. So on that point, in the US, the fees charged by the retail banks are $32 billion a year. Algorithms run on that Friday afternoon when money's coming in and money's going out, that they stagger it so that the money going out goes out first, so you get hit with an overdraft charge, and then the money comes in. So the entire model for retail banking, sorry for anybody from a retail bank here, but the entire model for retail banking around the world is predicated off fees now, not transaction-based fees. It's predicated off charging fees. In these new networks, it is impossible to be overdrawn. There's no concept of it. There's no concept of fees. So you're allowing financial certainty, feeless ecosystem, and the last bit, and I'll let Reuven will touch on this in a second on the digital identity piece, is it's attributed payment. You know exactly where the money's going to. So, problem statement, single mother gets the cash, estranged boyfriend beats her up, takes the cash, kid's starving. That happens a lot more than you'd think. With this, it's a phone with a print on it that only works if you've got the phone, if you've got the device, and you've got the person. It makes the friction of appropriating the funds harder, because you'd have to go into the store, physically abuse your ex-girlfriend, and force that. It makes it harder. So what you then have is attributed payments. This is all demonstrated in a microcosm in the UK. The fraud, error and waste on international distribution of funds out of the US, which is around $50 billion a year, is estimated between 20 and 40%. So the money goes out, you haven't got a clue where it goes, you haven't got a clue who's using it, and you get a report 3 months later. So the implications for the global economy are roughly around $1 trillion a year in savings if we can get these systems out. And so what I'm proud that we've managed to do in the UK is get it regulated and working and in the hands of citizens. What we have to do is work out who to work with, how to work with, to do similar in the US, because the numbers are staggeringly big here. So I'd welcome any conversations. We are a small company that partners with big companies. But it is, if you ever sat in a room somewhere and somebody goes, well, this blockchain stuff, is anybody actually really doing something? You can say, There's a company in the UK that's moving the government's money to citizens to solve for financial inclusion and losing an awful lot of money, and it works. Thank you very much.